Hey, what's up everyone? Got just a quick emergency upload for you today because the stock market all around the world is getting destroyed right now. And I just want to quickly explain what I think is going on here, what it means for stocks, and let you know what I'm doing myself if I'm going to be doing some buying here on these stocks falling. So let's not waste any time because I want to get this video out to you guys as quickly as possible. But taking a look here at pre-market trading, I'm recording this early in the morning here. There's still about 30 minutes away from the market opening, but I just wanted to get this video out to you guys as quickly as possible. So taking a look at pre-market trading, we're already seeing the Dow fall over 3%. The S&P 500 is falling over 4%, and the tech-heavy NASDAQ is taking the biggest hit, falling almost 6%. Now, mind you guys, this is after the previous closing from last week that was really bad, and I'll show you some of this in just a second, but coming off of some really bad economic data from the end of last week, we had many stocks falling very hard. The market as a whole was falling, and to see the market falling by even more today in pre-market trading, crashing pretty hard here, well, that's pretty wild because in total, it's a pretty big effect. Now, this is also having a ripple effect all around the world because you take a look at some of these other markets. Well, most European markets, they're falling around 3 to 4%, with Asia in particular taking some huge losses. Now, China is surprisingly holding up much better than most at less than a 2% drop, and I'll explain why that is in just a second. But Taiwan is down over 8%, South Korea down almost 9%, and then the worst of all was Japan at over a 12% crash, marking the worst day in trading for them since the Black Monday crash of 1987. How crazy is that? They've already lost all of their gains that they had from this year. It's pretty crazy. Now, some markets even triggered circuit breakers where trading was temporarily halted because of all the selling. And but taking a look at here, why was China holding up better than some of the others? Well, they actually released some economic data recently that showed their service sector had expanded at a faster pace in July, with a recent survey showing an acceleration in business growth being supported by, quote, sustained improvements in underlying demand conditions and an expansion of services offerings. So we're seeing China performing a little bit better than expected. Of course, their economy has been struggling for a while, but if you start to see a little bit of a recovery there, they're going to perform a little bit better. But that's not the case in America. We'll get into that in just a second. But on top of this, you also have China expected to come out with some key data later this week, so investors are still kind of waiting for some of that. And they're also waiting for some central bank decisions from Australia and India. So there's a bit of investor pause taking place in some areas, just kind of waiting to see what happens, how exactly all of this plays out. But again, that is not the case here in America because many US stocks are just getting pummeled right now in pre-market trading, like Nvidia falling almost 14%, SoFi down over 11%, Palantir down almost 14%, and many other tech giants like Tesla, Apple, and Amazon all falling around 10% too. Those are very popular stocks. And mind you, again, we had a horrible showing at the end of last week. So for these stocks to continue this falling, these are big drops that we're seeing here. Now, we even have the mighty Microsoft falling about 5% today in pre-market trading, Google down over 6%, and then Meta is down over 7% too. So big falls. Now, why is this happening? Well, again, we have to go back to last week. We got some really bad economic data towards the end of the week that could be signaling a recession. And that's what investors are worried about here, as the Fed has still not decided to lower interest rates yet. A lot of people thought it would have started to happen by now. It has not happened yet. They may do it in September. That's kind of the next signal that they're sort of hinting towards. It may happen in September, but as of right now, interest rates have held steady because the Fed is really trying to get inflation under control as much as possible before they have to go in and start cutting rates. But the fear is that they've held off for too long, and so the economy now may be starting to sink into recession. That's the big fear driving most of this. And the reason why? Well, we take a look at some of this data here. So weekly jobless claims once again rose more than expected, signaling a cooling labor market, with 249,000 initial jobless claims filed near the last week of July, which was up from 235,000 the week before. So it kind of continued there. We've been having some huge amounts of jobless claims happening on a weekly basis, and that continued towards the end of July, and it was at an even higher level. And this is also considered to be at the highest level of the past year. So this is starting to concern economists and analysts and so on. On top of that, US manufacturing sank further into contraction in July, with also the lowest number of the past year. And you can see some of that on this chart right here. I took a screenshot for you guys showing this sustained level of contraction that continues to linger on, showing manufacturing is very weak. Now, speaking about it, the Institute for Supply Management said, quote, "Demand remains subdued as companies show an unwillingness to invest in capital and inventory due to current federal monetary policy and other conditions." So yeah, that's of course what happens when you raise interest rates and you keep them elevated. It gets more expensive to borrow money, so companies invest much less. They don't try to grow. Consumers, of course, spend less, not to mention that, really everyone is kind of drowning in debt right now, desperately trying to pay back their debts in a high interest rate environment. Credit card debt especially is through the roof at record levels. So all of this is kind of snowballing into a weakening economy where businesses are doing much less, consumers are weakening, you have people losing jobs. So all of this is kind of snowballing into a very weak economy, and the fear is that it could get worse and worse, go into a recession if we don't start to cut interest rates. Now, this is why we always see this throughout history. Every time that you raise interest rates by a sharp level, you keep them elevated, it's almost always followed by a recession right after. Now, we also have another quote here, this time from Renaissance Macro Research, saying the ongoing deterioration in the economic data, as evidenced by today's rising initial jobless claims, low unit labor costs, and abrupt slowing in global manufacturing activity, suggests that we're getting to a point where bad economic news is bad for markets. Until the Fed begins cutting, they're going to look behind the curve. In my view, the upshot is that this is a small policy mistake that can be undone very quickly. And so, yeah, that's kind of the hope that you're now seeing from a lot of analysts and investors, is that this can be reversed if the Fed starts to cut interest rates. And so you're now seeing more policy experts asking for exactly that, saying that now is the time to start cutting. Now, I will just say though, my 2 cents on all of this is that I don't try to predict exactly when all of this will get resolved, because even if the Fed does start cutting rates, there's typically a lag there. There's a long delay from when they make policy changes to when you actually see the effects materialize within the underlying economy, right? So it could still take some time, and stocks could be headed lower from here, even if the Fed starts making policy changes. On the other hand, if the Fed does start making policy changes soon, sometimes you get a bounce back in the stock market because the market likes to be forward looking. So if they see some signals that interest rates will be coming down, they might start buying into stocks. Investors might start buying in, and that might send stocks higher. So who knows, guys? It's very hard to predict these types of things. What I can tell you is that regardless of where stocks are heading right now, if stocks are heading lower, correction turns into something worse, recession, crash, I will be a buyer the whole way through. I'm a long-term minded investor. You guys know me. I'm almost always a net buyer of stocks. So anytime that stocks are going down, I typically see that as buying opportunities. And I like to do most of my buying during those scenarios. Now, granted, I do it gradually, slowly over time, and I'm cautious because I do think that the market was already way too high to begin with. I think the economy is pretty bad. I think that stocks should be much lower. So I would welcome a correction. I would welcome a big drop in the market. Obviously, I don't want people losing their jobs. I don't want a recession kind of economy where people are struggling. But in terms of, if I'm just looking at this from an investment standpoint, I do want people to be able to get the lowest prices possible on some of these stocks that are very expensive. And some of my favorite stocks like Amazon, Microsoft, Google, these very well-run companies, it's very hard to get low prices on them. It's very hard to drag them down. So any dips in the market, any chances I get to get those prices lower, I do see those as buying opportunities. So no matter where it goes from here, I'm kind of hoping that it continues to fall because I want to buy more as it goes down. So I will still be a buyer. And the way I see it too, there's a couple other thoughts I have on all of this. Another thought I have is that, look, as bad as things might look right now and as bad as things might get, you have to remember the Fed does have plenty of ammunition to send the market higher in the future. So if things get really bad, if we do go into a recession, the market crashes or anything like that, my not advice, I don't like to give advice, but my mindset would be don't panic, because the Fed will be able to lower interest rates, and that typically does recover the economy and it does send things soaring right after. So you kind of have to be patient with it. There might be some pain, of course, there could be a lot of pain along the way, but regardless, knowing that we have high interest rates right now, that makes me feel better about the future, because I know we can lower them and I know we can send the economy higher in the future if we have to. But for now, inflation is still, I think, too high. I think we still need to get more work done. So there's a lot of things kind of going on here. Another thought I have, just kind of speaking my mind with you guys, I'm making this video very quickly and just kind of speaking to you very unscripted, but another thought I have is that there is a lot of fear in the market, and that may continue to grow in the coming weeks and months, especially if the economy starts to get worse. I think we'll see a lot of fear. But right now, we're already seeing a lot of fear enter the market. And typically, those are environments that I actually like to buy, because the more that the fear grows, a lot of times the stock prices come down. And that's what we're seeing. In fact, when you look at the Fear and Greed Index from CNN Business, it is almost in the extreme fear category. Just a couple months ago, by the way, it was in extreme greed. So now it's been falling hard, and now it's almost at extreme fear. And of course, if the market keeps falling like this, if things get worse, it's going to get even deeper into that fear category. And then you look at some of these other metrics. Momentum is showing fear. Options activity is showing extreme fear. And market volatility through the VIX, it's skyrocketed today, also pointing to extreme fear. So I do feel that the bears are firmly in control right now. That makes me think that stocks may be heading lower in the near future. I don't know, time will tell. When you guys watch this video, market will be open, I'm sure, and you'll see if anything changes or if it continues to stay the same. But that's very short-term thinking. Longer term, I do just want stocks to keep going down so that I can buy at cheaper prices. And again, longer term than that, I'm still feeling pretty good about things, because I know that we can lower interest rates if we really need to. Anyway, this was just a bit of an emergency upload. I'm already going to be putting in some buy orders for Google, probably Amazon for sure. I'm going to be doing some buying, and if things get worse, I'm going to buy even more. So that's just my thoughts, though. I'd love to hear what you all have to say down below in the comment section. What do you think? You think this is a buying opportunity? You think things are going to get much worse? Where do you see things headed? I'd love to hear your thoughts. If you have any questions, let me know down there as well. But I will catch you in the next video, my friends. I hope you're all doing well. Good luck with any decisions you make out there, and I'll see you next time, guys. All right, take care. Bye-bye.